to Nirmal Bang, ladies and gentlemen. I'm Hiral Dadia. We have with us Ria Singh, technical analyst, currencies, joining in. Ria, welcome to the show. Ria, overall, what's the sense that you pick up with regards to where the Indian rupee goes? Because clearly the rupee is falling against the dollar and it's slumped to an all-time low as well.
Right. Well, the dollar has garnered strength, and this is one of the a major reason why we are losing such tremendously against the dollar, the Indian rupee. Now, but still, if you compare the strength of the Indian rupee, you see that even as the dollar, the dollar index tested beyond 104 levels, at this rate, at this level, a rupee should be 80, but it has just mere tested 77.50 and around those levels. And even at the start of the month we were quite predicting it that the range that the rupee will be maintaining was 77.50 and so on. But in overall what lookout there could be is, of course, RBI has stepped in to uh, aid the Indian rupee and put some block into further depreciation. Because even if you look at the forex levels that the RBI is currently at, it has clearly sold off dollar into the market in order to prevent the Indian rupee to further decline. But taking that in point, it has not helped much. Clearly, if you look at the levels, I think the RBI is pushing that the maximum resilient that the Indian rupee should be at is at 77 and around those levels in spot market. And it will come into the market now and then in order to maintain that levels. But whether these actions will sustain in the longer run, of course, it cannot do continuously intervention because we do have a widen trade deficit. We are accelerating with the imports. The crude prices are again putting a dent. It has cooled off, but still it is at a high levels. So overall, I think as long as your dollar remains as a strength, factor, because overall the sentiment around the globe is is a risk on, whether it's pertaining to the crisis with the Russia Ukraine, the liquidity tightening that is going around the globe and so forth. So obviously a lot of liquidity will be removed from the market, from the emerging markets and so on, and this will definitely put a dent into the Indian rupee. Apart from dollar strength, I think the major FII outflows that is happening from the past 3 months is the major factor why I have seeing Indian rupee not correcting or not moving towards the appreciation phase, even with the regular interventions and the various OMOs and the various, sell buy dollar swaps that the RBI is doing. So overall, unless the sentiment improves into the market, confidence comes back into the emerging market, and of course, the liquidity, as it is anticipating along the market lines, that it will be much aggressive with respect to the Fed. Uh, Unless some cool off happens in those factors, we'll definitely see a rupee moving towards the depreciative phase. So 77.50 will be a major support, or the major levels that one should see. When it moves beyond 77.50 and sustains the same, we can definitely see 78.25 and even 78.65 around those levels in the near future.
Right. So with that, in terms of the yen as well, is historically undervalued and it's hit a 20-year low already. BOJ has ruled out widening yield band to stem the yen fall. So how are you seeing the yen move as well?
Uh, well, Japanese yen has come up. It has what do you say, retreated from the lows, but there is not much of a positive sentiment there, because overall the picture comes to this as to what the government is doing, what the Bank of Japan will be doing in order to curb those, and what will be the quantum of such actions. Because if you, like you said, it is an over time low against the dollar, and a huge quantum of actions or huge steps or huge alteration into their fiscal policy will be required in order to get the depreciative behavior of the yen to calm down. Unless such steps are taken, this mere small steps will not put a very much dent into the strength of the yen. So we are not quite positive as far as Japanese yen goes.
Right. And what's the view coming in with regards to where the euro goes as well?
Well, Europe is the the frontline currency that is taking the hit because of the because of the Ukraine and Russia war. And of course, if you look at the overall outlook for the economy as well, it is not on a very brighter side. There is a sentiment that if like the UK is doing aggressive pullout of the liquidity, and if such thing happens, aggressive pull out liquidity. Now, why the Fed is not doing aggressively or removing the liquidity aggressively is because then it will hamper the growth of the economy. Okay, so in order to get the gradual shift from the accommodative to the quantitative tightening, there is a gradual phasing out that is done as far as Fed is concerned. But if you look at the Europe side, UK is doing aggressively. Okay, and this is a putting then that if such aggressive stand is continued, it will put a very deep dent into the economic recovery. They are already suffering from the Brexit issues, and the energy crisis is something another factor that is going around all the Europe. So obviously, the underlying economic factors are not supporting the Europe zone altogether. There is a high risk of stagflation that pertaining to the pound as well as euro. So you can definitely see some positive that will come in because of the dollar reclining now and then, but otherwise it will remain on the depreciative stand at least for a few weeks, unless some concrete statement comes from the ECB or UK. They have release statement, but unless those some concrete steps or some concrete statement comes to support the currencies, it will not have a very drastic appreciation. It will either remain on the weaker zone or on the consolidated phase.
Right. And overall, if you see in terms of the strategies, what would you recommend?
I think buy on the USDINR will be a prudent way to go, because even in the today's sessions we did see it opening on the weaker note, because there is an intervention that is happening, but it has remained quite confirmative into the 77.50 levels altogether. So 77, you can buy the USD INR above the level of 77.55 for a target of 77.85 and stop loss at 77.35. For you can also go long into the options of 77.50 call for the expiry of 13th May. Buy around buy around the 0.16 for a target of 0.28, 0.36 with a stop loss at 0.05. So these are the two strategies that one can go forward with. For the JPYINR, I think you can go long into the JPYINR, but please maintain a very strict SL into the JPYINR, because it's a quite a volatile session or quite volatile momentum that JPYINR is facing right now. So you can buy JPYINR above the level of 59.75 for a target of 60. Keep a very strict SL at 59.55. So these are few strategies that one can go forward with.
Right. All right, Ria. Thank you so much for sharing the strategies and giving your views as well. Thank you, participants, for joining in.
Thank you, Eden.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.